Hello everyone, I am Ankush Chedimar and welcome to my YouTube channel. Today we are going to cover SA 315, SA 320 and SA 330 from our new concept book. First of all, let me tell you, in the ISA module, in the index, it is written that for SA 315 and SA 320 that we have already discussed them in depth at your intermediate level, and only case study based level question will be asked in your CA final level. So what I have done is I have taken your IInter module, I have extracted the 325 and 315 content, and then I have noted down those content that can be asked by ICI in a case study based MCQ, and only those content I have included in your final audit concept book. So you do not need to worry about any of the other things that is not covered in the concept book for these particular topics. Everything that is relevant from CA final perspective is all covered in your CA final audit concept book. This is the new concept book in which we have already covered your tricky questions as well, so that you can directly go do the questions from the concept book itself, and there is no need to refer the question bank, but we will be referring few questions from the concept question bank itself. And sir, all the important topics are also marked in this particular video, so do watch the video till last. We are going to cover it from our new handwritten notes, in which we have made the handwritten notes more detailed and more colorful. This PDF can be found on our Telegram channel. Telegram channel link can be found on our description and pinned comment. Do ensure you join the Telegram channel, because you can find the PDF, as well as we are going to conduct an MCQ test for this particular topic on our Telegram channel. So do ensure you join the Telegram channel, and at the end of the video I'm going to ask an MCQ and you have to answer the MCQ as well. So do ensure you watch the video till last. Please like the video, because our target is 500 likes. I'm pretty sure that you will definitely help us in achieving the target. Please comment down CA with your name, so that you make a manifestation that you are definitely going to clear your CA exams. And do ensure you subscribe to this YouTube channel as well, because we have covered all the revision videos prior to this particular topic, and we will be covering more revision videos and more resources for your CA final audit. And yes sir, if you are finding any particular topic difficult, then do ensure that you pause the video and study it yourself, because revision videos are more important and self-study is most important. And lastly sir, if you have any query, if you have any question in this particular topic, that you can ask in the comments, so that I can reply to that and many students can get their query resolved. Okay, yes sir. So without much ado, let's begin with our SA 315. What does the SA 315 say, sir? Because before beginning with our SA 315, let's start with our assertions. What is assertion, sir? Assertions is basically all the representations that is made by the management, whatever the management is representing embodied in the financial statements, which is all the representations management has made in the financial statements are called assertions. And why auditor is concerned with the assertion, sir? Auditor considers whether any potential misstatement is there in assertion or not. Repeat with me, you have to comment down this particular line, that mistake is not in account, a mistake is in the assertion. Accounts are not misstated, assertions are misstated. So we have to identify potential misstatement that can happen in the assertion. Sir, I still did not understand what is assertion, so let me give you an example. So suppose there are three categories of assertions that we have in particular your syllabus. So the three categories are the first category is your class of transaction and event, the second category is your account balances, and the third category is your presentation and disclosure. Class of transaction and events is basically your P&L, account balances is your balance sheet, and presentation and disclosure is your notes to accounts. So suppose for example in the P&L you see traveling expenses of 50,000. Now by seeing the traveling expenses, whatever thing you can assume is called assertion. Whatever things the management has represented is called assertion. For example, by looking at the traveling expenses of 50,000, what we can see, sir, that first of all, occurrence, O for occurrence, which means what? That the traveling expenses of 50,000 has actually occurred in this particular year pertaining to the entity. Second is completeness. All the traveling expenses during the year have been accumulated and combined in 50,000 rupees. Next is A for accuracy, which means all the plus and minus things that are done in the traveling expenses for computing this 50,000 are done accurately. Next is your C for cutoff, which means this traveling expenses of 50,000 is of only current year, not of the next year. And lastly, C for classification, which means all the expense of 50,000 that is classified in the traveling expenses is correct, it is not to be capitalized. Okay, yes sir, these are the representations that is being made by the management by showing the traveling expenses of 50,000 in the P&L. The same way, if we look for the account balances, suppose the example is your data are of 50,000 in your balance sheet asset side, then what we can assume, sir, what management is trying to represent? First of all, E for existence, that the data are existing on the balance sheet date of 50,000 rupees. Next, R for rights and obligation, which means what? The data are rights of the entity has to receive 50,000 from the debtors. And in terms of liability, suppose it has a creditor of 50,000 rupees, then those creditors are obligation of the entity has to pay them 50,000 rupees and not any other entity. See, for completeness, all the data on the balance sheet date are represented in this 50,000 rupees. And lastly is for valuation and allocation. Whenever valuation and accuracy is discussed, we talk about the plus and minus things. So data, what do we minus, sir? We minus the provision for doubtful debt. So in the valuation, we will check the provision for doubtful debt. That is called valuation. The valuation of the data set 50,000 rupees is very correct. Here we can remember it from the OCACC part. OCACC is what, sir? Occurrence, completeness, accuracy, cutoff, classification. Here it is ERCV, that is existence, rights and obligation, completeness, valuation. And when I told you that the mistake is not in the account, it is in the assertions, I am trying to say that based on the assertions we perform our procedures. So if I have to say, if I have to check data, I have to check existence or rights, then I will do data's confirmation. I will set confirmation to the data and I will check their responses. If I have to check completeness of the data, then I will check whatever the bank statements, the subsequent bank statements after 31st March, whatever the bank statements of 3 months, I will check and I will see what money we have received from the data and whether those data were recorded on 31st March or not. And lastly, if I have to check the valuation, which means I have to check the provision for doubtful debts, which are created, which are based on the aging analysis. So I will see what all percentages the management has made and what all the, and whether the management has done like this, that all the previous, the very old datas are created at more percentages than the datas which are new. Okay, yes sir. So these all things are happening in your assertions. And last category is your presentation and disclosure. You don't have to remember assertions separately for this presentation and disclosure because they are coming from above only. 1 2 2 3 3 4 5. What is 1 2? 1 2 is basically your occurrence and rights and obligation. 2 3 is basically your completeness and completeness, which is completeness. 3 and 4 is basically accuracy and valuation, and 5 is basically your classification and understandability. Presentation and disclosure, for an example, you can say contingent liability. So first of all, contingent liability is the obligation of the entity, can be an obligation of the entity. Completely all the contingent liability that are there are disclosed in the financial statements. The contingent liability, amount of contingent liability is valued appropriately. The classification of that amount in the contingent liability is correct. In the presentation and disclosure, we don't have existence or cutoff because if the contingent liability is existing, then it is not a contingent liability, it is a liability. Second thing, in terms of cutoff, there are many incidents that have happened after the year end, but still we disclose it in the financial statement. Suppose if there is a fire which has a huge impact on the financial statement, then we disclose it in the financial statements. But if we follow cutoff, then that should not have been disclosed. So that's why cutoff and existence we do not check in your presentation and disclosure. Okay, yes sir. The assertions can be positive and negative. Negative means what? Something is not existing, something is not there in the financial statement, that it is called negative. And negative assertion can be expressed or implied. Express means what? The entity has written in the financial statements that there is no contingent liability. It is in express form and it is in negative form. Second, there is no contingent liability in the balance sheet. There is nothing mentioned about contingent liability in the balance sheet, that it is an implied negative assertion that contingent liability is not existing. Okay, yes sir. This was an overall brief of assertion. I hope you definitely get to know what is an assertion. Now let's factually start your essay 315. What is essay 315, sir? Essay 315 talks about identifying and assessing the risk of material misstatement through understanding the entity and its environment, which means what, sir? Here we understand things. Here we understand the processes in the entity. Here we are not testing anything. Remember, while identifying and understanding, we are just understanding. We are not testing anything. And this particular thing is called what, sir? This particular thing is called risk assessment procedure. Now, why this particular standard? Why we are assessing the risk of material misstatements, sir? So that we can perform further audit procedures and respond to those risks. If there is more risk, then we will perform more procedures. If there is less risk, then we will perform less procedures. To do further audit procedures, we are doing risk assessment procedures. Okay, yes sir. So now what is the objective of auditor as per say 315, sir? The objective of auditor is identifying and assessing the risk of material misstatement. Now the risk of material misstatement can be at the financial statement level, suppose accounting software, or can be at the assertion level, suppose inventory count. So whatever the level of risk of material misstatement is, we need to identify and assess whether it is low, medium or high. How we can do that, sir? By understanding the entity, its environment, its internal control. And why we are doing it? So that we can implement the responses to the assessed risk. We can perform further audit procedure, which we will be discussing in essay 330. Okay, yes sir. Now for doing this, what does an auditor do? The auditor first of all identify the risk while understanding. Then after identifying the risk, they assess the risk, whether the risk is of the financial statement level, whether it is pervasive, whether it is spreaded in the financial statement, or whether the risk is of assertion level, whether the risk is at the assertion level kind of a thing. Then after assessing, what do we actually assess? We assess in that particular assertion whether there is a likelihood of misstatement or not, and what is the possibility of multiple misstatements. We assess 4 things, or we do 4 things. We identify the risk, we assess the risk at financial statement and assertion level, and we see the likelihood of misstatement. Okay, yes sir. Now while doing risk assessment procedure, what are actual procedures that we performed in risk assessment procedure, sir? So basically there are different types of procedures that we will perform, that we will be seeing in your SA 500. But out of those procedures, only few procedures are performed as risk assessment procedure. For example, we do inquiry, we ask entity questions, we do analytical procedure, trend analysis, ratio analysis, we do observation, we look at the person performing the process, we do inspection, we check the documents, we do physical verification. These all things are included in your risk assessment procedure. There are other procedures like your maybe you can say external confirmation. That is not part of your external risk assessment procedure, because while external confirmations, we are doing testing of the balances, and testing is not included in your risk assessment procedure. That was asked in by ICI in your MCQs and descriptive, that we will be doing soon. Okay, yes sir. So let's discuss it from the concept book. Whatever we have studied till now, we are studying about SA 315, identifying and assessing the risk of material misstatement while understanding the entity and its environment. The objective of auditor is to identify and assess the ROMM at financial statement level or assertion level by understanding the entity, its environment, and its internal control. And this is your definition of risk assessment procedure. Why we are doing it, sir? So that we can implement the responses to the assessed risk. Wherever there is high risk, we will implement more responses. That is FAB definition. That is your further audit procedures definition. Okay, yes sir. Now, why we are identifying the assessing the risk at ROMM, assessing the risk of material misstatement at financial statement level and assertion level for ABCD. What is ABCD, sir? ABCD is account balances, class of transactions, and disclosures. And now while we are doing it, what we do, sir, we perform three things. First of all, we identify the risk, then we assess the risk, whether the risk is at financial statement level or assertion level, and then we consider the likelihood of misstatement. Now here only the ICA has asked a question that if we are communicating with the external legal counsel, which means the lawyers of the entity, or if we are sending bank confirmation, they are not part of risk assessment procedure, because we are not understanding, we are actually testing the balances, so they are not part of RAB, they are part of FAB, that is further audit procedures. Now next is your assertions. Assertions mean what, sir? All the representations that is made by the management, either they can be explicit assertion or they can be implicit assertion, that is embodied in the financial statement, woven in the financial statements, and it is used by the auditor to consider what are the potential misstatements that can occur in your ABCD. Okay, yes sir. The assertions have three categories. One is class of transaction and events, that is P&L, account balances, balance sheet, presentation and disclosure, that is your notes to accounts. Classes of transaction: OC, ACC, occurrence, completeness, accuracy, cutoff, classification. Account balances: ER, CV, existence, rights and obligation, completeness, valuation and allocation. And your presentation and disclosure, that is 1, 2, 2, 3, 3, 4, 5. Occurrence and rights and obligation, completeness, classification and understandability, accuracy and valuation. Okay, yes sir. Negative assertion, there are two types: express and implied. Express is basically if the financial statement is stating that there is no contingent liability, then it is express. Implied means there is nothing mentioned about contingent liability, that it is an implied negative assertion. Okay, yes sir. Here also we have to discuss about the internal control, whatever internal control that we will be discussing from your previous essays. Now we are going to discuss what is the meaning of internal control. Internal control is basically all the processes, all the systems that are developed and implemented by the management and TCWG. Why they have developed it? So that they can get reasonable assurance. Here also internal control gives us reasonable assurance, not an absolute assurance. Just like audit, internal control also gives us reasonable assurance because they have inherent limitations. Okay, yes sir. Now what reasonable assurance the TCWG and management is obtaining from the internal control? That the entity's objectives are being achieved. Now what are the entity's objective? Four kind of entity's objective. First of all, for the effectiveness and efficiency of operations, how we can keep it effective, how the operations will be effective when we will be complying with the laws and regulation, how we will be considered ourselves as efficient when we will be safeguarding all our assets, keeping our assets under lock and key, and if we are doing everything, then the reliability of the financial statements will increase. So these are the four objectives of our internal control system. Now here either you can remember it from this particular flowchart or you can remember it from this mnemonic as well, that our entity's objective is to care for everyone. Care means what, sir? C for compliance with laws and regulation, A for safeguarding of assets, R for reliability of financial reporting, and E for effectiveness and efficiency of operations. Okay, yes sir. Why we have to obtain only reasonable assurance from the internal control? Because there are limitations. For example, suppose we have a maker checker internal control, but the maker and checker both have colluded in themselves, both have teamed up, and the management will not get to know about it. So there is a limitation, inherent limitation of internal control that we will be discussing in detail in your risk assessment and internal control chapter. Okay, yes sir. That's what I forgot to tell you at the beginning as well, that there are many things that you won't find in this particular topic because those are not part of your essays, like inherent risk control, risk detection risk. These are all covered in your risk assessment and internal control chapter in your concept book itself, that we will be discussing it after doing our all essays. Okay, yes sir. Now there is one question, that manual elements in the internal control may be more suitable in what circumstances? Because there is automated control which is done by the systems themselves, and then there is manual control where we hire an individual to perform that control. So they are saying that automated controls can be applicable anywhere, but there are few circumstances in which manual elements in the internal control may be more suitable than your automated elements. And which are those circumstances, sir? Where we have to make judgments, because for judgments we can only rely on the human, we cannot rely on the machines. So here they are saying what are the circumstances, sir? First of all, when there is large, unusual or non-recurring transactions, then for those transactions we have to apply manual control. And because of these transactions, the error may be difficult to predict. In these large transactions, the errors may be difficult to predict, and wherever the errors are difficult to predict, we need to apply manual elements. Second is the automated control is not working correctly, which means what, sir? The scope of the automated control is restricted, and we want beyond something. Suppose, for example, suppose that there is a changing circumstances and the response that we want is beyond the scope of your automated control, then we will have to apply your manual controls. Secondly, for monitoring the effectiveness of automated control, we cannot apply another automated control. We will have to apply a manual control only for checking whether the automated control is working correctly or not. Okay, yes, sir. So for these four situations, the manual elements in internal control may be more suitable compared to your automated control. Next, what are the factors that will help us in identifying the significant risk? Because wherever there is a significant risk, we will have to perform more procedures. So what are the factors that will help us in judging whether the risk is a significant risk? What are the factors, sir? The biggest factor, the biggest significant risk for us is risk of fraud. Wherever there is a fraud, this is a significant risk. Now, the fraud can be in simple transaction or complex transactions. Obviously, it's a complex transaction. So complex transaction, which are the transactions which are complex, sir? The related party transactions which are specifically outside normal course of business. Those transactions are specifically very complex, and there can be a significant risk. And the example of this particular type of transaction was covered in your essay 240. Essay 240, we have done that essay 240 with just one example for all the cases, and I have done your completed your essay 240. So do ensure that you watch the revision video as well. Now, the risk of fraud either can be done through complexity of the transactions, or that can be also done when there is a subjectivity in measurement of financial information. Now, what is that, sir? For example, suppose there is an accounting estimate which we will be discussing in essay 540. For example, we want to make a provision, and the provision can be made. The first case is the range of the provision can be from 1,000 to 5,000, and the management had decided that the provision will be of 3,000 rupees. Now, secondly, suppose second case is the provision range can be from 1,000 to 10 lakh, and the management has decided that the provision is 5 lakh rupees. Now tell me where it will be, there will be high uncertainty in this particular case or in this particular case. Obviously, sir, in this particular case there is higher uncertainty that the provision made by management is wrong. Why? Because the range is very wide. So whenever the range is very wide, the subjectivity involved in the measurement of financial information increases, and there is a significant risk. And whenever there is a subjectivity, where there is a subjectivity, sir? When there are significant developments, when there are significant changes in the systems and everything, there are always loopholes, and there can be a significant risk. Okay, yes, sir. In this way, either you can remember all the points in the flow chart, or you can also remember it from the one thing that significant, whether the risk is a significant risk is judged by scorer. Who is a scorer, sir? How we can remember? S for your subjectivity in measurement of financial information, C for your complexity of transactions, O for outside normal course of business, R for risk of fraud, E for significant developments in economic and accounting, and R for related party transactions that are significant. Okay, yes, sir. Let's discuss it from the concept book. We are discussing about this internal control. Internal control are all the processes and systems that are designed and implemented by TCWA management so that they can get a reasonable assurance that they are achieving all the entities' objectives. What are the entities' objectives, sir? Their operations are all effective and efficient. When they will be effective, when they are complying with the laws and regulation, when they will be efficient, when they are safeguarding their assets, and if everything is correct, then their reliability of financial reporting will increase. Okay, yes, sir. Now there are inherent limitations of internal control, because of which the internal control can only provide us reasonable assurance. Now this is important topic. Manual elements in internal control can be suitable for few circumstances. What are the circumstances? First of all, when there are large, unusual or non-recurring transactions where the errors are difficult to predict, and secondly, when the automated control cannot give a control response, means the control response is outside the scope of automated control, or when we want to ourselves monitor the effectiveness of automated control, then we will have to apply the manual controls only. Okay, yes, sir. This is important, and this particular topic was important. Next, we have to discuss about the risk that requires special audit consideration. This is also important. When we are exercising our judgment as to which risk is significant risk, we need to consider the following factors. The first is the biggest risk is your risk of fraud. Where will happen the risk of fraud? When the transaction is complex. Which is the most complex transactions, sir? Those transactions which involves related party which are outside normal course of business. Secondly, where it can happen risk of fraud? Where there is a subjectivity in measurement. And when there is a subjectivity, sir? When there are significant changes, significant developments in economic, accounting or other things. Okay, yes, sir. Now there is one one MCQ that was asked by MCI, that there is a risk management policy which is made by the management. Management makes a risk management policy and they identify all the risk of material misstatement. As an auditor, do I have to read those risk management policy? Yes. Even if management has made risk management policy, and even if that is considered by the management, we also have to understand the risk management policy to identify those risk of material misstatement that management might have failed to identify. So we cannot just rely on the management to identify all the ROMM. We have to also identify the ROMM through risk management policy. Okay, yes sir, we will be doing this thought at the last. Okay, chaliye. Next here, look at over here, we are discussing our SA 320. What does SA 320 say, sir? SA 320 talks about the materiality in planning and performing the audit. Why this particular essay has come into picture, sir? Because we do not have unlimited time, we have limited time, so we should be focusing our attention more on the material things. So that's why this SA 320 guides us in materiality, like which things is material and which things is not material. So here they are saying, what is material, sir? So they are saying the misstatements are material if they can influence the economic decisions of the users of the financial statements. I am an investor and I want to invest in the entity. If there is 1% of the revenue which is materially misstated, I will not be concerned. But if the revenue is 5% materially misstated, I will be concerned and I will change my economic decision of investing in the entity. Then that particular 5% of the revenue will be called what, sir? It will be called material. Okay, yes sir. And the materiality does not depend only on the size of the misstatement, like it is 1 crore, 1 lakh, then it will be considered material. The materiality of the misstatement also considers the nature and circumstances of the misstatement. For example, in terms of circumstances, if the misstatement is done by the management, even if it is of low amount, it will be material because there may be other circumstances as well which the management might have done a misstatement. Next, in terms of nature, if there is a statutory requirement of disclosure, law requires to disclose something, and if we are not disclosing it, that can be also considered material. For example, law says that for income and expenses, those small income and expenses, you have to disclose separately. You cannot merge them with the other income heading and the other expenses heading if the amount exceeds 1% of the revenue or 1 lakh rupees, whichever is higher. Secondly, if a shareholder is holding more than 5% of the shares, then they need to disclose the details separately. If you are not doing it, even if the amount is low, it will be considered as material misstatement. Okay, yes sir. Now this materiality is set at the financial statement as a whole, and it is set for particular ABCD as well. For example, suppose you are auditing OpenAI, you have set a materiality for the financial statement as a whole, but OpenAI is obviously that the ChatGPT wala entity. Now in that particular financial statements, there is an AI research and development. Now on that AI research and development, the users are kindly more attention, more focus, because if suppose the AI or research and development expenses is 1 crore rupees, and if there is a misstatement of even 10 lakh in that research and development, if the entity is even misstating by 10 lakh, then also users economic decision changes because it is of so much important for users. So if there is any particular ABCD on which users attention is focused, then we can basically set a separate materiality level for that particular ABCD as well. Okay, yes sir. So materiality can be for the financial statement as a whole and for particular ABCD as well. And it likewise here in this particular case, suppose understand we have a materiality of 50 crore rupees. Now what has happened, sir? All the items of that were above 50 crore rupees, we have checked all the items, but all the items that were below 50 crore rupees, we are not checking that. But it may so happen that there are two misstatements, 35 and 30 crore, which we haven't corrected, which we haven't checked, and they are combined, aggregated, exceeding the materiality. In this particular situation, to avoid this particular situation, we are setting performance materiality. What is performance materiality? The materiality set by the auditor to perform the procedures. While performing the procedures, we will consider this performance materiality. Suppose we have set it at 25 crore. So now what will happen is, while we are performing the procedures, we will check all the items that are above 25 crore. So we will check these two items as well, and we will get them corrected. All the items that are below obviously will be ignored, but all the items above this will be corrected, so that the probability that the misstatements exceed your materiality can be reduced, because all the big misstatements will be corrected that are above the performance materiality. Okay, yes sir. And this performance materiality can also be set for your ABCD, individual ABCD, just like the materiality. Okay, yes sir. So what is this, sir? SA 320, we are talking about materiality in planning and performing the audit. Misstatements are material if they can individually or when aggregated can influence the economic decisions of the users of the financial statements. Now if there is a statutory requirement of disclosure, it is considered material irrespective of the amount. What is the statutory requirement, sir? As per Division 1 Schedule 3 of Companies Act, first of all, if there is any item of income or expenditure which is exceeding 1% of revenue or 1 lakh, whichever is higher, it should be disclosed separately. And secondly, if there is any shareholder which is holding 5% of more than 5% of the shares, then the details specifying the number of shares should be disclosed separately. Okay, yes sir. Next, they are saying that the materiality that we are determining at the planning of the audit, it is not necessary that it is an amount below which all the misstatements will be regarded as immaterial, because misstatements does not, materiality does not only depend on the size, but it also depends on the nature of the uncorrected misstatements and the circumstances in which the misstatement is happening. So even if the size is small, we can identify that misstatement is material. Okay, yes sir. Now materiality is at financial statement level and for particular ABCD. Similarly, for performance materiality is an amount that is set at less than the materiality, so that we can reduce the probability that all the uncorrected misstatements will exceed the materiality. Okay, yes sir. And it can also be set for particular ABCD. Okay, yes sir. Next, here is one more important question. Now, how does the materiality set? Does the auditor say that 1 crore is material to us? No, the auditor doesn't say that. The auditor identifies a benchmark and applies a percentage to the benchmark. Suppose in the profit oriented entities, we identified profit before tax as a benchmark. Profit before tax is 1 crore, and we have applied a percentage 20% to the profit, which means 20 lakh is our materiality. That's how our materiality is defined. We keep a benchmark, we apply a percentage to the benchmark, and that's how the materiality is decided. Now, what will be the benchmark and what will be the percentage? That is the professional judgment of the auditor. Now, here there are some factors given over here which can help in identifying the benchmark that is used to determine the materiality. Now, how we can determine the benchmark? How we can identify the benchmark? Which benchmark we have to use? Whether we have to use revenue, profit, revenue, expenses, assets, liability, what exactly benchmark we have to use for determining the materiality? These are the factors that help in identifying that benchmark. Now, how we can learn this, sir? Directly from the heading itself. For benchmark, sir, we have to see the relative volatility of the benchmark. If the benchmark is very volatile, 1 year down, 1 year up, 1 year down, 1 year up, so that benchmark is obviously neglected. The benchmark which is steady, not highly volatile, that benchmark is selected. Next is what's up, which select the benchmark based on the nature of entity, the life cycle, the industry, and the economic environment, how the entities are selecting in the industry. Next, in terms of materiality, we have to see whether there are any items of the financial statements in which the attention of the users is most focused. Like in terms of ChatGPT, we saw about the AI research and development. Next, attention of users is focused on what, sir? The ownership structure and the financing. Okay, we have to check that. Next, in terms of financial statements, we see what are the available options as a benchmark. What are the elements of the financial statements? What are the assets, liabilities, revenue, expenses? We have to see. Based on these factors, we identify the benchmark, appropriate benchmark, and apply a percentage, and then we calculate the materiality. Okay, yes sir. Now some example of benchmark is given which can be asked by ICN and MCQ. For profit oriented entities, obviously the benchmark is profit before tax. But what if the profit before tax is very volatile? Then we take gross profit or revenue. For public utility program, for government programs, for bridges, for construction of dams which are not profit oriented, what do we take, sir? We take either total cost or we take net of cost, which is minus revenue, any revenue that might generate. And lastly, for entities which has custody of assets, which has many assets as a custody, for example mutual funds, then we take assets as a benchmark. Okay, yes sir. Now, can we change materiality during the audit? Yes, sir. As we change planning and strategy during the audit, we can also revise materiality during the audit. Why we will revise, sir? Suppose there is any new information which, if I had known it earlier, then I would have determined initial change amount of materiality. Then I can change. Because of new information, there are change in circumstances or there is a change in understanding due to the FAP that I have performed. These three reasons, because of these three reasons, I can revise materiality. Either new information, change in circumstances, or change in understanding. Okay? Yes, sir. Now, if in this particular case I have to lower my materiality, then it is more of a concern to me, because if I am lowering my materiality, I will have to check more things. For checking more things, I may need to revise the performance materiality as well, because I will have to reduce my performance materiality too, and I may need to revise the NT of FAB because I will need to perform more procedures. Okay, yes sir, this was the thing. Let's discuss it from the concept book. We are discussing about use of benchmark in determining the materiality for financial statements. They are saying that determining the materiality involves professional judgment. A percentage is applied to a chosen benchmark so that we can get a material amount. Now, what are the factors that help us in identifying the appropriate benchmark? First of all, sir, to see the benchmark, whether it is the relative volatility of the benchmark, and second, we see the nature of the entity, its industry and economic environment and everything. Second, we talk about the materiality, whether there is any items where the attention of users is focused, and secondly, what users of attention is focused, sir, ownership structure and the way it is financed, and lastly, we see the financial statement, what are the elements of financial statements. Okay, yes sir, what are the example of benchmarks, sir? Profit oriented entity, profit before tax. If PBT is volatile, then gross profit or total revenue. For public or utility program or project, it is total cost or net cost, that is minus revenue. Or for custody of assets, we have assets. Now, what is the revision or revaluation of materiality? Can we do, sir? Yes, we can do. This is also an important topic. Why we need to revise, sir? Based on the new information, there is a change in circumstances or there is a change in understanding of the entity. Now, there is an example that is given in your question as well, that the actual sales of the entity, suppose the actual sales, the expected sales of the entity was 1000 crore, but the actual sales deviated significantly from the expected sales. The actual sales were only 500 crore. So now we will need to revise the materiality. Okay, yes, sir. Now, after revising the materiality, if we conclude that there is a lower materiality that is appropriate from the previously determined materiality, then we need to consider to revise the performance materiality and revise our NT of FAP as well. Okay, yes, sir. We have to do one practical question from our Mahasmart Marathon, page number 2, that is given in your concept book itself. We have included everything in your concept book. All the Mahasmart Marathon topics were also included. If you don't know what is Mahasmart Marathon, you can definitely just check out this particular pages that are given in the last of the concept book. You will get to know. These are AI based practical calculation questions that I have framed. So here in that particular question is 320, about 320. Here we are given profit before tax, revenue and total assets. First question is we have to determine the planning materiality, which is 5% of PBT or 0.5% of revenue, whichever is lower. So we have calculated 5% of PBT, 0.5% of revenue, whichever we have taken lower of both, that is 1,25,000. That is going to be a planning materiality, which is materiality for financial statement as a whole. Now we have to compute performance materiality, 75% of planning materiality. So 75% of planning materiality will be your this particular amount, and performance materiality is also always calculated as a percentage of materiality. Next is we have to compute clearly trivial threshold at 5% of planning materiality. What is clearly trivial threshold? This is a threshold below which all the items will be ignored. We are not going to test any of the items that are below your clearly trivial threshold. So what is a clearly trivial threshold, sir? 5% of planning materiality. This is the amount. Now they are asking, there is a misstatement of 1 lakh rupees, whether it is material or not. For identifying whether a misstatement is material or not, we compare with the amount of materiality, not with the amount of performance materiality. For performing our procedures, we take performance materiality. For identifying a misstatement is material or not, we take a planning materiality. So here we will consider it with the planning materiality, that is 1,25,000, and that is lower, so that's why it is not material. Okay, yes sir, this was your essay 320. We will discuss it at the end regarding the thought. Let me get back to the particular topic of the concept book. So yes, we will discuss it at the last, and now we are discussing about essay 330. Look at over here, sir. We are discussing about auditors' responses to assess risk. So they are saying about essay 330, like when we have to respond to the risk that we have identified in your essay 315. So what we have to perform, sir? We have to perform further audit procedures. There are two types of further audit procedure. One is testing the controls, that is test of controls, and another is testing the amounts, that is substantive procedures. In the substantive procedure, there is test of details, that is verification of balances and vouchering of transaction, and another is substantive analytical procedure that we will discuss as per essay 520. So analytical procedure can be performed as a risk assessment procedure and can be performed as a substantive procedure as well. Okay, yes sir. Now when we are designing what is a further audit procedure we need to perform, we need to consider two things. First of all, what are the reasons that were given for ROMAM assessment at each assertion level? Okay, this assertion was identified the ROMAM as high or medium or low. Then what was the reason based on which we will perform our risk assessment procedure, further audit procedure? And next, if there is high risk of material misstatement in any of the assertion, then we need to obtain more persuasive evidence, which means more sufficient and appropriate audit evidence, which means we will need to perform more further audit procedure. That's what it is given. Okay, yes sir, while designing FAB, we need to consider these two things. Next is what, sir? Now let's talk about TOC. TOC is basically while evaluating the operating effectiveness of the controls. Operating effectiveness, which means the objective of the control is getting fulfilled or not. What is the objective of the control that we have discussed in essay 265? The objective of the control is to prevent the misstatement or to detect and correct the misstatement. So whether the control is operating effectively in preventing or detecting and correcting the misstatements, we have to evaluate that, and the process of evaluating this is called the test of controls. Now when we have to do test of controls, it is not necessary to do in all the situations, but there are few situations or most of the situations where test of control is necessary when the procedures before it and the procedures after it have some flaws. The procedure before it means what? Test of controls. Before test of control, what do? We perform risk assessment procedure. So while we were performing risk assessment procedure, the auditor was having an expectation that the controls are operating effectively, which means the auditor wanted to rely on the controls, and if we are relying on something, we should test whether it is worthy of reliance or not. So we will need to test the controls. Second, the procedure after test of control controls, which means what? Substantive procedures. If the substantive procedures alone cannot provide sufficient and appropriate audit evidence, then we will have to perform test of procedures, test of controls to provide audit evidence, sufficient and appropriate audit evidence. Okay, yes sir, these are the two reasons for performing TOC. And if we are more relying, the greater that we are relying on the operating effectiveness of the internal control while our risk assessment, the greater persuasive audit evidence we need and the greater test of controls we will need to perform. Okay, yes sir. Next is a substantive procedure. Sir, substantive procedures helps us in identifying material misstatement at the assertion level. Okay, yes sir. And here they are saying even if your risk assessment is low, medium or high, doesn't matter, you have to perform substantive procedures. Why sir? Why we have to perform substantive procedures for all assertion level? Because our previous two procedures are very incorrect. Previous two procedures means what sir? First of all, your risk assessment procedure, your Romam assessment judgment is very judgmental. It may not identify all risk of material misstatement. So if you are saying that Romam is low, even then there can be a material misstatement. So you need to perform substantive procedure. Next procedure is your test of controls. Even if you do test of controls and you identify that all the controls are operating effectively, the internal controls themselves have their inherent limitations. So you may not identify those limitations and you may believe internal controls when you should not have believed. And lastly, the third point is obviously the thing that we have discussed in SA 200, that to maintain a professional skepticism, we will have to perform substantive procedures even if the Romam is low. Okay, yes sir, these are the three reasons for performing substantive procedures even if the Romam is low. Okay, yes sir. Lastly, I will ask an MCQ as well, so do wait till last and let's discuss it from the concept book what we have studied till last. SA 330 auditors responses to assessed risk. The audit procedure divided into two parts: risk assessment procedure and further audit procedure. Further audit procedure in two parts: test of controls and substantive procedure. Substantive procedure in two parts: that is test of details and substantive analytical procedure. Test of details in two parts: verification of balances and vouching of transaction. While we are designing the FAB, we consider two things. First of all, what are the reason that is given to the Romam at the assertion level for ABCD, including inherent risk and control risk. Now, what is inherent risk and control risk? We will discuss it in your risk assessment and internal control chapter. Next is we need to obtain more persuasive audit evidence. The higher is the risk of higher is the Romam assessment. Okay, yes sir. FAB contains two things: TOC and substantive procedure. TOC is basically evaluating the operating effectiveness of controls, whether they are effectively preventing the material misstatements or detecting and correcting them. Okay, yes sir. We need to design and perform TOC for two reasons. This is important. What are the two reasons? Before procedure is wrong or after procedure is wrong, which means what your Romam assessment is containing an expectation that the controls are operating effectively, which means you want to rely on the controls, or your substantive procedures alone cannot provide sufficient and appropriate audit evidence, so you need to perform more TOC. Next, if you are greater the reliance on the effectiveness of the controls that you are placing, the more persuasive audit evidence you need, the more TOC you will need to perform. Next, in terms of substantive procedure, this is also important, that the audit procedure that are designed to identify the material misstatement at the assertion level, and irrespective of your assessed Romam, you need to perform substantive audit procedures for each material ABCD. For example, even if the Romam is low, you need to perform external confirmation procedure. This is one of the questions that we will be discussing right now, and they are saying even if the Romam is low, we need to perform substantive procedure. Why sir? Because our risk is judgmental, risk assessment is judgmental, it may not identify all Romam, and there are inherent limitations in internal control, including management override. What is management override? We have covered in your SA 240. Now let's discuss as a question number 37. This is your question bank. The way you are seeing the question bank, the same way you will get in the printed version as well. The questions will be highlighted, the answers will be highlighted, it will be fully color coded, the source will be also highlighted, and we are going in the sequence wise, essay wise in your question bank, so that you are able to do the concept along with the question. Yes sir. Okay, so let's discuss the particular question. They are saying that the risk of material misstatement is low, but still the auditor chooses to send the external confirmation request. Do you think the approach is in accordance with essay? Yes, the approach is in accordance with essay. Why sir? First of all, SA 330 states that irrespective of your assessed Romam, auditor shall design and perform the substantive procedures. The risk of material, in this particular case, the risk is low, Romam is low, still we have to perform substantive procedures. We need to identify whether external confirmation procedures need to be performed as substantive procedures, and despite low risk of material misstatement, we can perform substantive procedures because the risk is judgmental and internal control has inherent limitation, and also because of professional skepticism. So the approach adopted by this particular auditor is in accordance with your standards on auditing. Okay, yes sir. And lastly, if you find any mistake in your test of controls, then it is called deviation, as discussed in your any mistake, any deficiency we find in your internal control, that is called deviation. And if you find any mistake in your amounts, that is called misstatement. Okay, yes sir, this can be asked in your MCQ. Now let's discuss MCQ. You have to answer that in your comment section, and whoever answers this correctly with an explanation, I will definitely give a heart so that other students know what is the correct answer. So the question is, you have to identify whether it is a compliance or non-compliance. They are saying while obtaining an understanding of the entity, auditor has identified significant changes in company's revenue model and IT system during the year, but because substantive substantive procedures were planned to be extensive. Many substantive procedures were planned. So the auditor decided not to update the risk assessment documentation relating to all these changes, whether it is a compliance or non-compliance. Next, the auditor determined that the materiality for the financial statement as a whole. Okay. Now, during the audit, actual results were significantly different from the preliminary information that we use in determining the materiality. However, the auditor did not reconsider the materiality because he had already performed the audit procedure. So we did not reevaluate the materiality, compliance or non-compliance. Next, the auditor assessed the risk of material misstatement relating to revenue recognition as very significant, that there was a significant risk in revenue recognition. In response, the auditor designed and performed the additional audit procedure specifically for this particular area. Now, instead of solely relying on the procedure performed for other audit areas, he designed and performed additional audit procedures. Whether it was correct or wrong, you need to identify that. Now, during the TOCO purchases, they identified deviations that indicate that the controls were not operating effectively as we expected. So the auditor increased the substantive testing in that particular area, and he also revised the NT of the further audit procedure. Whether it was compliance or non-compliance, you have to identify. These are the options you have to answer in the comment box, and if you don't know the answer, you can get to know the answer in the pinned comment. I have attached the answer with the explanation, so you can read it from there. Okay, yes sir. So if you have watched this lecture till last, that means you really love this lecture. So please do like the lecture so that we can reach to our target of 100 likes. I'm definitely sure that you will help me in reaching the target. Do comment down, we will become chartered accountants, so that I can know that you have actually watched it last, and do share your feedbacks. That will really motivate me to push myself harder and post more revision videos, more resources for CA final audit. And since we have been doing this revision video, at last I will just take your 2 minutes and let you know about our all free resources that are there for CA final audit. That is very important for you. These are all the resources, and all the clickable links for our Telegram channel and of the YouTube channel is given on this particular PDF file, which can be found on our Telegram channel. Please make sure that you don't miss any of the resources. For specifically English, we have recorded all the MA 26 new case scenario booklet was in English, so you can definitely watch it from here. For paid resources, we currently have an exam oriented batch of 45 hours, which contains 100% concepts and 100% questions. We are going to soon launch new batches for English as well. Concept book, as you can see from the video itself, we have exam focus insights in the concept book. Question bank, we have one more unique thing. There is a part 1 and part 2 of the question bank. Part 1 all has interpretational question, analytical question, tricky questions. Part 2 all has direct questions which can be read understood from the last line itself. So you can skip the part 2 and you can just do the part 1 and you can save your time. This is how we create anything unique that we do, and we are providing with much quality that we can provide. Next is handwritten notes. Handwritten notes PDF can be found on our Telegram channel. Printed colorful version will be posted soon, launched soon. Test series, we have all subject test series for CA final. Cumulative test series, 30% syllabus you will revise 3 times, 70% syllabus you will do 2 times, and 100% syllabus you can revise 1 time. Full syllabus, we have 4 series for full syllabus. 10 days challenge, each subject of 10 days you can revise each subject in 10 days. For the 5 mock tests included in your 10 days challenge, you can get all the details from here. Detailed evaluation feedback are provided by CAs for each question and for overall test. And ICA level paper pattern we have to draft, and you will get a comparative analysis on a test series dashboard website itself. You will see question by question what was the topic, what was the chapter, and what marks you have got, what is average marks, topper marks, top 10 percentile marks, top 25 percentile marks. That will be shown in your test series website dashboard itself. Next sir, we have, if you want, one friend come guide come mentor who there's with you, guide you, who plan for you, who motivate you, who keep you in discipline, who pressurize you, who emotionally support you till the exams. Then we have a one-on-one mentorship program. 62% passing percentage was there in your January 26, which was a difficult attempt. You can click here and get all the details. You can win cash prizes up to 1,20,000 per student. All the details are mentioned in the comment box, and this click here description as well. And this is just a motivation to make you work harder. And lastly sir, for after your CA exams, we are there for you for your career as well. Resume, LinkedIn, interview, domain wise guidance, everything is provided in your Career Navigator program. And sir, once you become a chartered accountant, I will felicitate you. We will definitely party together in our felicitation fiesta. The glimpses are over here, and you can WhatsApp me any of your queries. 9023725601. You can WhatsApp me here any of your queries. I will definitely reply to it. Your audit and AFM is our responsibility. For our AFM, we will be also coming out with many of the resources by Nikhil sir in English definitely very soon. Okay, yes sir, after this you can do any of the questions of this particular topic, and you can definitely solve it very easily. Important topics that I have marked you in this particular lecture is general important topic. Your attempt specific most expected topic will be marked just before your attempt. Okay, yes sir. Lastly, I will just like to say the 3 thoughts. The first is your as per SA 315. the chapter you avoid today is often the chapter that decides your result tomorrow. So do be very particular while leaving any chapter. I will obviously recommend you to not leave any chapter, but if you are skipping any chapter, do ensure that you are very particular about choosing the chapter that you are skipping, because that may decide your result tomorrow. It may happen that the chapter may be asked for more marks in your exam, so do ensure that you are very particular. Next is your as per essay 320. The secret of success is knowing what deserves your attention. Not everything deserves your attention. You should know what deserves your attention. The topics which have been asked by ICA repeatedly in exams should be deserving your attention, not those topics which are not asked by ICI till now. So you should definitely know what deserves your attention. That is the secret to success. And lastly, as per essay 330, it says you can't always control the risk, but you can always control the response. The risk is that we might end up not scoring well in exams. Why, sir? Because maybe our examiner didn't check the paper correctly, or the examiner was having a fight with his wife, and that's why he didn't check the paper correctly. So there can be multiple reasons which are not in our control, but our control, what is in our control, is to respond to that particular situation, is to prepare ourselves for that particular situation, and to prepare with every effort that we can do, 110% of the effort we can do. And if you are promising me that you will do 100% efforts, then do comment down. I will become chartered accountant. This time we will score exemption and audit. Please keep me in your prayers. Thank you. Bye bye.